Good morning, all. Ira Epstein with your weekly future subscriber video for this Sunday, Halloween, October 31st, 2021, 8:13 a.m., and that is Mountain Standard Time. Well, as you know, I'm out of town. I'm in Mexico. That's why it's Mountain Standard Time, the first thing. And obviously, working here is a little different than it is at home, but I'll do the best I can, and let's get things rolling for you. To me, the one very obvious thing is we had this big break, as you know, in September. The market came back, and if it was going to act as it has in the past, it had to go up and make new all-time highs in the stock indices. And my gosh, I think you could say that that's the case. If you look at the monthly area chart, you can see this a new all-time high. The previous one, 45.2050, and we've gone through that. When you come to the weekly charts, we had the breakthrough here, the break here, and I was fortunate enough to have told you that if I'm right, you come down, you play around, and then you go and you make another new all-time high. Again this weekend, I've been reading the news, and the people are there saying the market's overvaluated, it's setting up a monstrous break. At some point, everybody's going to be right on that, who's writing those articles. No question, at some point. I don't know when that point it is. Until it happens, it hasn't happened. And those are the people that are just left behind in the dust as this market hasn't let them do much. They keep looking for the break that doesn't last. Yes, the market is weakening a little bit. You see that each time it comes down and gets under that. But then it comes back with the ferocity. Okay, until that ferocity's gone, why back away? When you look at the action right now, I have to define this as a vertical price move. Why? You don't have the normal setup that I'd like. I'd like to see a pattern of higher lows, higher highs. So instead, it's come from this break low period of 42.6750 to 46.0350. I think you see that. The market is staying over the 18-week average of closes. That part is bullish. What next? The Bollinger Band. Each time you get to these Bollinger Bands, I know you're going to tell me, oh, they're going to keep going. Now they don't. Now eventually, it'll break and push the band and twist it where the band has to turn up. That could happen at any point. The band, though, tells you you're in a resistance area. No more than that. It is not telling you to go short the market. It's telling you that the pros from this break low that got in probably taking some money off the table because you're at a projected resistance zone. I like the sideways action that it's done. The daily charts are certainly still very bullish, but you can see where you're at in slow stochastics overbought on the weekly chart as well. Then you get to the NASDAQ, and here too, our prior high, just so you'll know, was right in this area, 15,708.50, right there. And now you're sitting here, we got up to 15,864.75. So similar, you got down, played under the 18-week average, came back. Again, you're at a resistance point. This is a spot where the pros lighten up, not where they get aggressive to push it higher. The same in the Dow. In the Dow, though, you have an uptrend at least. You've got a pattern where you've got higher lows, higher highs. This is sideways action. This could be actually a base that forms, and if the market starts breaking out of this, it'll take a couple of weeks to know that. You have to get 2 weeks in a row where you're outside of the Bollinger Band, closing the top quadrant each time to tell you it's a new breakout. Right now it's a resistance point, bullish, but a resistance point. Russell coming back and screaming, don't leave me out of this. Well, 23.50.30 was the last high. You didn't quite get there, so you're sort of left out of it. You're back into your resistance the way you were here. When you come into some of these, by the way, you can see that you'll play sideways, and this is what you get when you start pushing on these bands. And you'll get where the markets start moving out and closing the top quadrant, and it tells you you're in a breakout, and that's what the market's doing. So I wait for that. You know, I'm not obviously in these videos. I can't show you things the way I want while I'm on vacation, but next week I will be back in Chicago and able to do that as I'm in front of my screens. In the 30-year bond, what do we have? A higher high, lower low. You got down to the 200-week moving average of closes, the lower Bollinger Band, and you're fighting at the 18-week average of closes, maybe. trying to get up there right now, oversold condition. They changed the curve yield on people. I think you're aware of that, where they started taking the back end of the market, giving it more yield, and the front end losing some of the yield. That's called the flattening of the market. And a lot of traders think when that happens that it's the beginning of the end of a rally in stock market, because interest rates are going to change to the front end, getting more expensive. That's the theory. Doesn't mean it happens right away. 10-year notes, all right. So what you did here is you had a breakout to the downside out of the sideways action. And if you look here, you did the same thing again. Remember where I said you close to the bottom quadrants of each type. So this was a breakout, and you can see the market's having a heck of a time trying to do anything other than get back over the the lower Bollinger Band in the market. Oversold, but could start to embed. You had 1 week there. This was the second week. Third week will be even more bearish for the market. In the dollar index has done what? I've changed the look of this for you intentionally. It stayed over the 18-week average. It keeps an upside bias. It went up first to the 100-week average in the upper Bollinger Band. I said back here to you, the market's got a lot of resistance, should fall back, and it did. Next in the euro, it's the flip-flop. You've got the 200-day average, the 100 in green, and the Bollinger Band. So yes, the market's in a support zone. That does not mean you're bullish. It's in a support zone. The trend is down. You know that the market's ready to change in favor of the euro. If anytime in the next 2 weeks you take out this week's high of 117.02 and a half. If you don't do that, do you break out further to the downside? That'll be the question. Right now, the bears are in control. Canadian dollar. Well, you can see where you're at right here. You've got a market that's got overbought condition, higher lows, higher highs. I look for a lot of resistance here at the 81.42 and a half area. In the yen, the market, you count how many times you're under the Bollinger Band. So if you look right here, the market closed literally, what is that? Right under it. Week 1, 2. This week you finished at 88.19 and a half, and the Bollinger Band 88.30. So you could be in your fourth week down. You're getting excessive. I wouldn't press the market much more. You rarely go more than 5 weeks out of a Bollinger Band on the top side or bottom side. Bitcoin, higher lows, higher highs. Again, our old friend telling us, hey, be careful here. Market got up and over the Bollinger Band, pulled back. But are you developing an embedded reading? You are. As I'm in Mexico, I can't tell you how many people I've run into, and all they want to know is about cryptocurrencies. What do I think of cryptocurrencies? And I mean, it's just everywhere I go. And it's interesting. Once people hear I'm in finance, some people even knew me from TV. But as you look at the market, it's fighting its bands right through here. Okay, I can live with that. Still bullish, embedded reading. No reason to be bearish. You're friendly. Look at the differential between Brent and WTI. My gosh, I didn't even realize it had done that. I went and checked it to see what it had done. Now remember, these are now, if you look, 83.72. Just want to give you 83.57. So they've really come together on the weekly basis, and you're no longer tracking December. You want to be tracking now the Januaries. I made that clear to you, but on a weekly chart, pretty amazing. The market's rolled over on the right-hand side here. So until this high is taken out, over the next 2 weeks, if it is in the next 2 weeks at 86.72, I look for more of a decline, but it's an embedded reading. It's telling you it's a decline, not a change of trend. Do we understand that? To change the trend, the red line has to close under the 80 level. WTI, how many weeks do we have over the Bollinger Band? First off, not there. Well, actually, that is week 1, 2, and now you pull back, and it's not embedded either. So this is a market that's got the resistance. You had an outside week down. My hardest problem when you have this happen and all the key moving averages are under the market, if you take out that high, measuring where you go. We have a technique at Linn called the price counts. You might want to call us at 866-973-2077. We send them out every week, free to our clients. We'll give you a trial to it if you would like that, and my staff will be there to help you. Then we have the rebob gasoline, and as you see on the rebob, the market coming down, and now the big reversal. Okay, looks to me like a short-term top on it. You did not get an embedded reading. I can argue you're headed back to 227.45 and to make a decision on what to do next. And that's where I'm seeing these markets. Now I'm going to put something back here. You might want to take a look at our course on enhanced Bollinger Bands. It's going to change how you look at charts, be it spiders, futures markets, ETFs, stocks. It doesn't matter. You have a great day.